The largest IPO this year is coming to Hong Kong, and it's time to learn all we need to know about Ant Group, the company behind Alipay. Hi guys, Stanley here. Welcome to my channel, and if you'd like to keep up to date with investment news and analysis in the Asian stock market, remember to subscribe to my channel so you will be notified on our upcoming video. And if you are feeling generous, please give us a like on this video as well. Anyway, the wait is over. The largest fintech in the world is finally coming to market. Ant Group, the company behind Alipay or 支付宝, has just submitted its prospectus to the Hong Kong and Shanghai stock exchanges. According to news reports, Ant Group might be listed on both exchanges by October this year. It is expected to be raising close to $30 billion at a valuation of about $225 billion. So what is the business of Ant Group and why is it the most anticipated IPO this year? Let's take a look at how the company was able to start out as just a subsidiary of Alibaba Group but grew to become the largest fintech in the world, with 4 major sources of revenue that amounts to more than 120 billion RMB or $17.6 billion in 2019. You might not have heard of Ant Group, but it is the company behind the largest e-wallet in China, Alipay. And to fully understand Alipay, we must first understand its full history all the way back to 2004. At that time, Alibaba Group, led by the famous Chinese entrepreneur Jack Ma, has just launched Taobao, its C2C e-commerce platform. Taobao is Alibaba's attempt to fight off eBay, which has just entered the Chinese market at the time. Taobao was gaining a lot of interest from the Chinese consumer, but there's one problem. There isn't any transaction happening on the platform. At the time, there are 2 main options for a transaction to happen on Taobao. One is for the buyer and seller to meet at a physical location and perform the transaction. That is easy only if the buyer and seller were from the same city. For the others, there was the option to wire the money first to the seller and wait for delivery. And as you expect, no one feels comfortable enough to make payment first. The buyer did not want to pay without assurance that they will receive the products, and the seller will not sell the item unless they were paid first. So to solve the trust issue, Alibaba created Alipay to act as an escrow account to hold the money for the buyer, acting like the middleman. So as much as all our crypto evangelist brothers and sisters like to get rid of the middleman in a transaction, it turns out that there's a real important need to have a middleman in some transaction, especially those happening online. And with that, Alipay was born. Alipay will earn a small transactional fee from the merchants for processing that payment, similar to a credit card company like Visa or MasterCard. And facilitating transaction on all Alibaba's platform is still a big part of their business today. In the last 12 months, Alipay processed more than $17.2 trillion in China alone. To put that into perspective, Visa, the largest credit card issuer in the world, processed about $11 trillion globally in 2019. So in terms of transaction, Alipay is at least 56% larger than Visa. From that large base, Ant Group was able to start its next segment of business, providing credit. From their large base of users and merchants, they started providing loans to both the consumer and the merchants. However, unlike most financial firms, the lending business for Ant Group is not risky at all. This is because Ant Group does not provide the credit, but rather work with credit companies and banks which will underwrite these loans. Ant Group only provides the technology and the platform to link up the lenders and the borrowers. And for their effort, Ant Group will earn a small technology service fee for originating these loans. Ant Group has about $400 billion worth of loans outstanding on its platform now, making it the largest consumer and small business credit service provider in China. And in the most recent financial results, this segment is actually the largest revenue contributor for the group. Next, its third segment of business is its asset management arm. This segment only started in 2013 with the launch of Yuebao, the money market fund which Alipay user can buy directly from the app. It allows customers to invest very small amount of money and they can withdraw at any time without any penalty. The interest in Yuebao grew so fast that by 2018, its AUM was close to 300 billion US dollars. It grew so big that the Chinese government has to step in to regulate it. The government requested Alipay to start limiting the withdrawal and deposit amount for each individual user. This was because Yuebao has grown so huge that it could pose a major risk to the entire Chinese banking sector. Today, Alipay has since opened up the platform by partnering up with other asset management firms and allowing them to sell a wide range of funds through its platform. From its IPO prospectus, Alipay has about 600 billion US dollars worth of asset under management now. Again, Ant Group does not manage these funds directly, and they earn a technology service fee from the fund management companies. The last segment of business for Ant Group is its insurance business. The business model is similar to both its credit and investment business. It works with insurance providers and sells a wide range of insurance through Alipay. Today, this business is the fastest growing segment, but is still relatively small compared to the other three. Another interesting aspect of Ant Group is that in 2011, it became a major stain in its founder, Jack Ma's personal career. As we mentioned before, Ant Group started out as a subsidiary of Alibaba. However, in 2011, when Alibaba Group was preparing for its own IPO on the New York Stock Exchange, the Chinese government started regulating the e-wallet industry, asking all operators to apply for a license. The problem is that the government gave local companies an easier route to apply for the license, while foreign companies were subjected to government approval. Alibaba at the time, because its major shareholders are Yahoo and SoftBank, it is considered a foreign-owned entity, and this put the future of Alipay in jeopardy. So to resolve the issue, Jack Ma transferred the ownership of Alipay to a private company owned by himself and a few associates. Although SoftBank and Yahoo knew about the problem, they were also caught off guard by the ownership transfer. In an attempt of damage control, Ant Group has agreed to transfer a third of the economic benefit to Alibaba in 2011. And in 2018, they officially transferred a 33% equity stake of Ant Group to Alibaba. Jack Ma also agreed to reduce his personal benefit from Alipay significantly. Of course, regardless of the damage control, the whole incident has greatly damaged the reputation of Jack Ma, even until today. Nonetheless, Ant Group is still a wonderful company that is disrupting the entire financial sector in China. Its revenue and profit has more than doubled in the past 2 years and is still growing strongly. With the rise of fintech, the rise of consumerism in China, and the rise of e-commerce, it seems that the best is yet to come for this company. We have actually done a full report on this company for our VIA Club members, diving deeper into the numbers and also sharing why I might be interested to invest in this IPO myself. If you're part of our VIA Club, remember to check out the report. And if you have enjoyed this video, I hope you give us a like and share it with a friend who might be interested. Till we meet again, my name is Stanley. Invest safely.